And Nicholas Poynton joins me now in the studio to talk business. Nicholas, so there are calls to make the Shovel Ready Fund bigger and better, and how so?
Yeah, I guess everything at the moment is quite big. We're talking big policy, big deficits, big projects, but it seems the law firm Simpson Grierson thinks things could actually be a little bit bigger. So they've published this report where they looked at the government's infrastructure-led kickstart to the economy amid COVID-19 and looked at some of the regulatory areas that could maybe be improved. And they found that the next government, one of the report's key findings is that the next government should look to extend sort of the life of that legislation that was set up to sort of fast-track projects.
Right.
So initially that legislation was set to expire or self-terminate in July 2022, but the report says that most infrastructure projects have a really big lead-in time that comes into them, and that for most of those projects, about half a dozen of them, or not half, about a dozen or so more, give or take a few here and there, that a lot of them won't be actually able to take advantage of this policy, given that so much time needs to really just get a big infrastructure project off the ground. So it says the next government that comes in, the first thing they should do is to look to extend that so that it would mean that more projects can actually be completed. The other thing it says that is the government's current $3 billion fund that's been set aside for shovel-ready projects, that should look to be expanded. It says COVID-19, it's sort of brought up the opportunity to sort of kill two birds with one stone, as they put it. The report said that with the pandemic, what it's sort of brought up is that obviously there's this need for big fiscal stimulus from the government in the way of infrastructure projects, but there's also this opportunity that the government, New Zealand has had this history of some infrastructure deficits in the past. So there's a really real opportunity here to really hone in and improve things that they say have been neglected in the past. But you've got to find a way to sort of fund this, and this is where they start to get a little bit creative. They talked about one way to fund this project would be through a value capture method, and which is quite popular overseas. But what that essentially is, and I know some listeners may want to cover their ears when they hear this, is actually a new tax. And it would be a targeted tax, whereby you target the value of properties that increase as a result of the big infrastructure project being built nearby. A really good example, I think, would be, imagine if you live in the outskirts of Auckland, a new big public transport project's been announced. It would halve your time for you to get in to the city than otherwise normally would. Well, you could probably see that the prices of properties in the area would increase. Well, what this tax would do, if it was introduced and would be implemented by the council, the report says, is that it would tax the value increase. So the capital gains accrued as a result of this new big infrastructure project. So
the council would implement it but not get the money because it would go to the...
It would be used to fund the
infrastructure project.
That's what they're talking about. So I know that tax is a really big hot potato sort of topic during election time. It would be really interesting to see if anyone would be willing to put their hands up to sort of maybe sign up to a policy like this. But I think what we're seeing is with a lot of things at the moment, a lot of law firms, economists, they're talking really big ideas at the moment. They're seeing this pandemic as an opportunity to sort of do things differently.
And the other thing about that, which is, it's another topic for another day, but various economists have said funding shovel-ready projects disadvantages predominantly women because those businesses are dominated by men, so that perhaps the money needs to be spread around. But let's move on to credit cards, which is the numbers are in. Are we spending?
Yeah, look, this is always an interesting topic, and I guess it's another piece to the puzzle to explain what's sort of going on at the moment. It looks like credit card spending over the month of August, it did take a step backwards, but that was down by about 5% to $3.6 billion in billings. And that sort of comes after some big month-on-month increases. But what we've seen, if there is sort of a bright spot to glean from the start, is that a lot of people are sort of taking these recent lockdowns to actually pay down their debt. So we've seen some outstanding bills fall by about 16% on the month earlier. So maybe people stuck at home during this time, they may be reflecting on maybe how much they did usually spend and then using this opportunity to maybe sort of push those levels down from where they usually are.
Let's have a quick whip around the markets.
Sure, the NZX Top 50, that's down by about 0.75% to 11,539. Our dollar is at 67.7 US cents, 92.5 Australian, 52.2 British pence, and gold is up 1/5% to 1,953 US dollars an ounce.
1/5%. Thanks, Nicholas. Nicholas Poynton with our business news there.